Melissa, well, it's a miss for Alphabet, the parent number of Google. You guys read the headline numbers. Let's go through them again. Actual EPS, $9.50. Revenues coming in at $36.34 billion. So you can see that Alphabet fell short, not just on the EPS, but also on the revenue side. Really interesting to note that the last 8 quarters, Alphabet actually beat EPS estimates 6 times and revenue estimates 7 times. Wall Street was expecting a lot today. The stock closed at a record, and of course, it's trading down in the after hours. Main metrics to watch here: what the company says about YouTube, what it says about digital advertising, traffic acquisition costs, and also its cloud computing business. Remember, Amazon had a blowout beat, and so that's going to be one of the metrics that we compare it to. On the services side, of course, Apple's going to report tomorrow. So how Alphabet measures up to these other companies in the FANG space, really, really important on Wall Street, guys.
All right, I want to go, or Melissa,
let me just add, because she mentioned the traffic acquisition cost that she wanted to see, and we're seeing that cross at $6.86 billion. Also, operating margin at 18%. Go ahead, Connell.
All right, so Adam, the traffic or the TAC traffic acquisition costs were supposed to be up 15.5% to $7.26 billion. As Melissa says, the number is below that at $6.86 billion. Stock, again, almost 3% lower. So what do you make of that particular number, which people look at, you know, how they're driving their traffic as a very important metric?
And I wanted to make sure I heard you correctly. They're spending more than the street expected or less than the street expected?
So it's less. It's $6.86 billion, which is less than the street expected. They expected them to spend $7.26 billion, is my understanding.
So the numbers crunchers are going to have to, number one, crunch that, and number two, ask the company, why are you spending a little bit less than we expected you to, and does that drive the lower revenue figure that you ended up with? What I was saying earlier, obviously, Wall Street expected more from Google Alphabet, but we're going to have to see in all the conversation and all the analysis how much more and how much this matters.
It's tough, Jonas, also on I mean, it's so big now, obviously, Alphabet, but it's also tough when you want to say, you know, Jackie brought up YouTube just as an example. You want to say, well, how are they doing with YouTube? It's obviously a huge part of their business, but they don't break it out. So it's kind of tough for us to know.
No, it's a black box. I mean, we know what they spend on some things and content, but we don't know how profitable it is. The bottom with this company is everything outside of what they disclose in advertising is kind of secretive and a very low margin or a negative margin business. It really sits on advertising.
Negative margin,
yeah,
right.
I mean, they really are rolling this advertising model. They're really beating that horse. And again, with a regulatory crackdown or just competition, as I was saying before, you know, people shop on Amazon now, and that becomes an ad place to run the ads for companies selling stuff as opposed to the search, because they turn search into shopping. So why not just go to Amazon and do your shopping there? So I think they're going to lose stuff there. I think if you're talking about acquisition cost, are you talking about how much they pay Apple? Because they actually pay companies for traffic.
And others.
And maybe they're getting less traffic. And that's part of another problem is there's this whole marketing bubble that goes on where all these unicorns are spending money trying to get drive traffic from other ones. If you look at all the low margins and all the recent IPOs, it's largely marketing and acquisition costs that are so high because they spend it on each other. It's the same money floating around.
Let me give you a few more metrics. Paid clicks on Google properties up 39%. Meanwhile, cost per click on Google properties down 19%.
Okay. Now, I think
that should be.
Go ahead. Well, Adam, actually, give me 1 second. I just want to take 1 second. I know because Jonas brought it up to, you know, explain or kind of read the definition of what the traffic acquisition costs are. The fees that the company is paying, that Alphabet is paying to its partner sites, right? So that the ads can be displayed, Google ads can be displayed, and or directing the traffic to the site. So it's not just to Apple, but it's to paying to all of its partners, right? So the idea that spending, as Adam brought up, it's spending less than Wall Street thought on this. But go ahead, continue your thought on what Melissa said, Adam.
Well, the two metrics that Melissa cited should be good news for them, should suggest that they're being more efficient. I wanted to say, Jackie brought up a very good point, that we are now, for the first time, comparing Google to Amazon. So Amazon has this giant web services business. Google doesn't, and they want one. And it's too soon to say if they're doing well enough to justify the investment, but we now know this is a very big business they have missed out on. So investors will be wanting to know, are you making progress or not? They just have a new head of that business. There's probably no evidence yet that they're catching up, but investors will want to know if they have a shot.
And then Amazon's also trying to catch up, so to speak, or to play, right, Jonas? in Google's business. And I think when Amazon came out, we were talking about its advertising business, which is where kind of Google owns it. So I guess the two companies, for real, they really are rivals as opposed to being.
To be honest, Amazon's the more dangerous rival. It was never set up to be not evil. I mean, that company was, came from private equity essentially.
That's a good point.
Alexa is beating Google. A lot of areas where Google's losing, maybe because they're not as aggressive as Amazon. I think we're also going to get a sign how weak the economy was last quarter globally. This whole $20 cost per click thing is very related to a strong economy of people paying for each other's ads. It should fall very rapidly, even in a slightly weak economy. And I don't think investors are aware how high that number is and how it represents how strong the advertising market is.
Okay.
That could go 30 or 40% in a recession.
I need to give you an adjusted EPS of $11.90. That's adjusted $11.90. We had $9.50 before. Go ahead.
All right. So on the earnings per share, you're saying it's better. Well, again, I think the stock, if anything, is selling off more here, Adam. The traffic acquisition costs and again the revenue being light. So it's clear people want more from the company.
I think Jonas makes a very good point that, the reason why we're spending all this time talking about Alphabet at the top of the hour is that it's become a proxy for not just the U.S. economy, but for the global economy.
So what does this tell us?
Well, I mean, I've been around long enough to be wrong with instant analysis, but if the revenue figure is light, it suggests that the revenue figure is light around the world. That's what we're going to want to know about.
All right,
you're so right about instant analysis,
I was
Adam.
thinking
Good
the same
thing.
We're probably
so
all
true.
Like we've all been around long enough to be wrong many, many times. Jonas, one last thought on this, then we'll wrap it up.
I think
how long have you been around to be wrong?
That's right.
Through 99. That's all you need to remember how much advertising rates fell by 80-90% in the last big recession. I will say, I think we're going to see that rates are coming down. The amount of profit you can make in advertising is already starting to go possibly even negative in some areas. In addition to all the competition from Amazon and their competitors, and that's going to start to weigh on investors' value of the future value of this company.